And we are live. There we go. We're back again. Had a great session yesterday. Today, I'm joined by the amazing Josh Smith from Vrgl. Very exciting conversation today because it's quite in line with a few aspects we're looking at the AI Journal. So around financial advisors, how AI and ML is helping this industry, how it's helping these people, and a very important part. I always say, Josh, like fintech's such an interesting, I don't know what your view is, but the fintech scene just blows my mind, like how big it's getting, how it's intrinsically going into so many different avenues or day-to-day thing. I don't know. What do you think about fintech?
Yeah, I mean, look, fintech, it's a really broad, subject area. So everything from banking tech to insure tech to wealth tech to payment tech. So, when you think of fintech, crypto, I mean, you could argue is a version of fintech as well, and certainly blockchain aspects. So, I mean, look, the world as we know it is becoming more intertwined, and certainly payments across borders and the way payments are made. I mean, everybody I know uses Venmo now. PayPal for the longest time was kind of it. You've got businesses with automated Stripe and Square. Keypads and everything on the payment side. Fintech, wealth tech, certainly everything from decision making to data processing. It's a really broad subject area, and certainly an area that, one of the benefits of what we do, and certainly a lot of companies like us, is really just taking archaic processes that are still very manual, still very much done in Microsoft Excel or other areas, and really just focused on streamlining those. It's not necessarily creating some new and novel way to do something. It's just, taking what takes a week and making it take, 10 minutes, right? That's where I see a decade plus of opportunity just to continue streamlining really archaic processes. And that's what I get excited about in the fintech space, whether it be investments, whether it be wealth, whether it be payments, whether it be insurance. There's just, a tremendous opportunity to continue to evolve archaic workflows and to continue to, actually create completely new and novel concepts. So it's a really exciting subject.
Yeah, it's cool. And I was over in, there's a number of points that I want to touch on in this conversation, but the Venmo, I was over in South by Southwest. We don't have it over here in the UK. So I'd never heard of it. And I was like, what the fuck is Venmo? And they were like, yeah, we'll Venmo you. And I was with a customer or something. And I was just like, I can't Venmo you. I was like, and I don't use PayPal. So I kind of froze up. I was like, we don't have that. We just have just banking, like just transfer someone. So it's cool. It's interesting how you have different things.
Yeah, no, I mean, look, we've got Zelle and Venmo and all sorts of ways just to enter in people's phone numbers and, things like that now over here in the States. And it's just, but, even what you said, right? I mean, Venmo's grown so rapidly, yet you don't have it in the UK, arguably, right there with the US in terms of innovation on all of these sides. So, I did not know that. So that's fascinating. Another growth area.
Exactly. And I want to know how did you get all started? Because it's a big area, as you said. There's a lot of different avenues that are exploring, and an idea I get carried away with is like fintech or banking or open banking and all these areas, and how they're going to work in the metaverse as well. Because someone was talking to me about the metaverse and like customizability. Am I saying that? Customizability is like very big there, and like all the in-app purchases and all the like data that you're learning about someone. But without going down that avenue, we'll go down that later. I want to know, Josh, what was your story becoming like the co-founder of this company, Vrgl, and what kind of led you to do it? Was it by chance, or did you see a pain point, or what made you think, screw it, I'm going to go start this with your other co-founder and get it off the ground to where it is today?
Yeah, as I somewhat alluded to, I'm a big believer in kind of solving, real world problems that exist today with by putting kind of workflows together and putting technology applied to problem areas that people already know exist. I'd really kind of, I'm not the guy who's going to go invent crypto. I'm not the guy who's going to go and create, the metaverse or anything along those lines. That's not how my mind thinks. I'm a very systematic thinker. To take a step back, I've spent, my entire career in and around financial services, predominantly investment banking, wealth management, and investment management. But on the investment side and on the banking side. And so it was, I started my career right before the financial crisis, 2008 to kind of 2012 happened. And I was real fortunate at a young age to get to live a problem, which was, the movement into private equity and venture capital. I just saw a stat, not to derail us a little bit, but I just saw a stat yesterday that, everybody's talking about venture capital and private equity having this downturn now and how the IPO values have fallen. But in 2008, I think the total assets under management for private equity were $1.5 to $2 trillion. Today, they're close to $7 trillion. So, I mean, private equity is now fundamentally very different, than it was in 2008. And so you've got that backstop because there's so much capital there. And I say that because, our big problem in 2008 and what led me into a career in technology was we were, a big institution that had a lot of kind of allocations to private equity and venture capital and growth equity. We also had a large public book, and we could not figure out for the life of us how to make our public book make sense with our private book. Yeah. And if you think about a hedge fund trader or your trader using Bloomberg or whatever, they're trading on direct securities that we see on CNBC and Bloomberg all day. But as soon as you start adding private companies that get valued once a year, how do you make sense of it all? And that actually was what I said, well, it's my job to make sense of it all. Yeah. And that led me to start a business over the course of, I fell off the investment side, moved to the operations side, said, this is a pain in the butt. I've got to streamline this. Yeah. So through a whole series of events basically became the CEO of a co-founder and CEO of a company called Solovis. That company became, the investment book of record for many of the largest institutions, family offices, endowments, foundations in the world, including many of the top 10. And sold that business to NASDAQ in March of 2020. And frankly, was feeling really good about it and really happy with where I was at. But kind of serendipitously, through a whole series of events, I realized that I really like the two guy in the coffee machine scenario a lot more. I like solving that early stage problem a lot more than I do talking about pay raises and, just sales commission plans and things like that. Like that doesn't excite me. And there are a lot of people that excites. I like to solve problems. And I really realized that. And so NASDAQ was great. The team was great. My team got an opportunity to step up and step into my role and other roles. And so I decided to start, Vrgl. And, the thing is because I had this big liquidity event, I myself have 3 financial advisors. And I went from basically all my money tied up in the company to now having a good amount of money. And suddenly I'm sitting here with all these people calling me. And I had to figure out how to actually have a conversation, right? And so I went through this problem of, how do I think you're going to do better than this other person? And why do I think you're going to do better? How can you historically show me you're going to do better? How can you tell me you're not just going to put me in a ton of risky assets? And how do I ascertain and actually make decisions? And that really is what Vrgl does. Vrgl allows a financial advisor to really make it very clear objectively, quantitatively, no BS, no, I just really like you and I'm just going to trust you and throw you some money. Really about that objective. And by the way, that's kind of how financial advisory works is, you hear the same stuff over and over. And frankly, do they take you to play a lot of golf? Do they take you to get some drinks? There's nothing wrong with that. There's absolutely nothing wrong with that. But it makes it a heck of a lot easier for me to make a decision if I can really just objectively get a sense for what's going to happen. And that's pretty much what Vrgl does is objectively give an advisor the ability to show a client what's going on in their world today, what will be going on in their world tomorrow if they become a client of yours. And so far we've gotten, a really positive reaction from it.
That's awesome. You made some great points in there as well. Because I always think there's always things like accounting doesn't excite me. I don't get excited by it. I'm a marketer. I love going out speaking to people. I love doing things like this so I can learn on topics. And we've got an operations guy at our company, and I think he's a gem. He's amazing, and he gets really excited by process driven. And to me, I'm just like, just tell me what I need to do because I'm much more instinctive. And I think taking that back to people that are in an AI role or a data role or a machine learning role, and this is sometimes what we always get asked, Josh, like the amount of roles that are out there that can be exciting is massive. So understanding that point, and like you've said, you figured out where it was where you can add value and where you can really harness that, not stick into something you don't know. I think it's that's a real good point to make to people. And as you were saying as well, with the amount of new data that's coming about and how people can make those decisions for tomorrow, that's so important because people can wine and dine you and take you out for nice dinners, like you were saying, the golf events and all this. But if you just want to clearly look at the numbers or clearly look at, okay, where am I going? Like there's people that are just much more driven on that side, on the data side, rather than maybe having the whole show given to them. They really just want to see kind of what is it I'm going to be doing tomorrow? How can you help me with that tomorrow, rather than telling me over a few cocktails or whatever it is. And I think that's so important today, because there's that data angle. And I say, I don't know how business operated, Josh, 50 years ago. I think, how the hell did they do it? Like, how did Walmart become the titan it was? Obviously, his book's really good, Sam Walton's book, and he says they invested in data and what was available at the time. But you look at what's available today compared to then, it's just like, how do you do that? Like, it's wild. Like,
it is. I mean, I even say 5-10 years ago, how did we operate without X, Y, or Z? I mean, I remember building a document system, and I was like, oh my God, if I had to deal with this thing today, but we're pretty good as a species at figuring out how to deal with what we got today and making it better tomorrow.
Yeah, I think so. So let me know. So tell me this then, Josh, how do you look at it from AI and ML? So these technologies that are coming through, mainly ML and subset of AI coming through, how can companies, or what's your view on companies being able to leverage this or leverage these technologies? Maybe not just those two, maybe go off on maybe something else if there's something else that you're familiar with, but how can it help companies increase revenue, maybe from a Vrgl perspective, or how can it increase growth, and what you've seen from a broader perspective? How can it help?
Yeah, well, first off, let's just establish kind of my philosophy on all of these buzzwords: AI, ML, metaverse, Web3, crypto, blockchain, just to name a few of the bazillion buzzwords that are out there. And let's just establish that that's what they are. They are concepts, and yes, they are backed by technology, but technology kind of unapplied, in technology not put in a business plan, really is pretty useless, right? I mean, I always tell people, even as great as I make software, if you don't have a business plan behind it or a good process behind it, you're basically you're not going to accomplish anything.
Yeah.
So when you talk about AI and ML, I think it's really important to talk about it, within context of what it is that you're trying to accomplish. And if you generalize it a little bit, AI and ML, specifically the concept of AI, really is helping accelerate decision making and helping process information that otherwise would have been manual or otherwise would have been mass quantities of information, and be able to synthesize it and process it in a way that is intelligent, right? And so there are aspects of learning, there are aspects of actual, intelligence or recommendations that come out of this. And I think it's really important that as people think about AI and ML, they kind of establish what it is and where it is that they are trying to effectuate a change. And so, as I think about my specific area of expertise, wealth technology, financial advisory, investment management, there is a tremendous amount of information that is out there, right? Everything from growth rates to inflation numbers to productivity numbers to, really anything. And, historically, you'd have a trader sitting at a computer, or you'd have your financial advisor sitting at a computer, and, they would have to really think through the issues. You'd have researchers who a week later would process this information and, help synthesize that against models that they had internally. And that would take weeks to months. Now that process can frankly take hours, right? And so, the ability it's why I think you see such very fast market movements. In today's world, it's why I think you see accelerants to the downside and then accelerants to the upside. Because you've got a lot of, I think in the US, 60 to 70% of daily market movements are actually computer generated. And it's because they can process information. They've been trained to process information in a particular way. They recognize the information, they recognize trends, and they're basically told explicitly that in these scenarios, these things should happen. And that really is, in my mind, while it might be a relatively elementary version of AI and ML, that's kind of the initial starting point that the financial markets kind of kicked off on. And the application of it now really is everything from, what prospects should I identify, right? Like, can artificial intelligence help me actually say, I've had 50 people send me information. Is there some attribute or series of attributes about any one or 10 of these 50 that means I should be talking to them, or means that they're a better fit than the others? How do I rank order those? How do I know how to spend my time more effectively? From an investment perspective, everything about fees to asset allocation, how do I synthesize that information in and actually make intelligent decisions around it, right? And so, we see a tremendous application for AI and ML in our space. I mean, one of the areas that we're talking about it is we have a breadth and depth of analytics within Vrgl that, if you're willing to spend the time to walk through every single analytic, for someone like me, it takes 15 to 30 minutes to be able to say, all right, here are really the key points. And what we realized yesterday, it was frankly just yesterday, myself and my co-founder basically said, look, we need to apply aspects of AI and ML to our application where, within a range or range bound, our system can basically just tell the person looking at it. So they don't have to go through all the analytics. Just tell the person looking at it, here are the 5 things that you really need to know. And if you want to know 10, click here. If you want to see the data behind it, click there. Right. So we're trying to push our application now from this broad swath of information that someone has to go through and synthesize. And applying AI and ML technologies to it to basically be able to say, all right, these are the 5 things that I really need to know. Here are the 5 points that I need to understand when I talk to this person are really going to move the needle. And if I can do that, if I can take 200 analytics and synthesize it down to here are 5 things you really need to know, then that's a home run for us, and that'll be a home run for people who use our application. So that's just a simple example of applying AI and ML to our world, but one that people have told us, and we've seen, we'll reduce 30 minutes down to 2 minutes, and we've already reduced 2 weeks down to 30 minutes. Well, now I can take 30 down to 2. And that's the beauty of technology. That's the beauty of AI and ML concepts.
Yeah. And especially if you can compound that, right? So you look at it over time. An engineer looks at building a bridge and they say how much it will bring it down over time, like over years and over decades, over 100 years. It's just phenomenal. And I was also looking up when you were talking there, Josh, like Statista have said that in 2020, AI startups brought in $36 billion in investment. In the first 6 months of 2021, guess what the number was? Just in the first 6 months.
Well over 100?
38 billion just in the first. That's ridiculous. Like the whole of 2020. I think there's a pandemic, and this is where the economy is going down. And the AI world's just non-stop. That's wild. Like to look at that, and that's exactly why I think you're on such an interesting point, because with all these startups receiving funding, which ones are the ones that are going to be unicorns? Which ones that are going to do well? Which ones are in the right industries? It's so important to have that data at the fingertips, right?
Yeah, it is. And look, the world is definitely, between the end of 2021 and where we are now globally, in terms of suddenly the power has swung back, because this is the space I'm in every day. In fact, we're raising capital right now. The power has definitely swung back to the GPs, to the private equity funds and the VC funds. So I doubt you'll see that type of flow, at least in 22, given the volatility in the markets. But I mean, look, it's still an astronomical number, even if there's a decrease in it from where we were 3, 4, 5 years ago. And there will definitely be winners and losers. But that's not a bad thing for the economy as a whole. So, we're really excited about it. I remember when Watson came out, IBM's Watson, that was like the first introduction I personally had. I mean, I'm a big tennis player, right? And so I love tennis, and Wimbledon's going on right now.
You playing Wimbledon?
And I remember, when the first IBM Watson Insights came out, and not to pitch Watson here, but there's a 36% to win this second service point based on historical averages of these guys playing one another, and I was like, wow, if I can actually apply that to my business, and granted, they're just percentages and insights, but how valuable would that be, to someone? I mean, how valuable could that be mathematically on the financial stage? So my introduction to AI actually was tennis and IBM Watson. So, and from there, it's just amazing. You can't really go anywhere without hearing, to some extent, artificial intelligence. You got robo advisors, got AI-based investment management functions coming up now. And some of those go too far. They go to the area of, we're going to replace humans. There are a lot of aspects of wealth management that, everything from lending to, lines of credit, it's massively overstated, as these things I think sometimes get. But there's certainly a tremendous amount of applications that AI and ML have to our market.
I love what you're saying there, because I mean, I could go down a rabbit hole with you, Josh, about how exciting AI and insight engines are for sports, because I'm a big fan of golf. I watch the tennis as well, but like using like it just spots out things I've never spot. Like it's just crazy to see from like the curve of the swing, how they're going to get to hole 18, what they're going to do on a par 4, and across the board, like you see it. A lot of people talk around football over here around how much it's like deciding how much they spend on a player, how much they spend, how much the ticket prices are, when the best time to make games are, all these different crazy things. I'm sure it's the same over there with sports you have over in America, like NFL and stuff, and basketball, about how many shots they're going to make. And I think it's just everything that AI can be applied to. It's crazy. It's very exciting to me as well to see that.
Anywhere you've got consistent data, right? Anywhere you've got consistent stream of information, that is somewhat standardized and normalized. Yeah. There really isn't, if there's value to it, there really isn't a reason why it can't be applied. And that's why the market is so massive, and why you frankly have hundreds of billions of dollars going into the marketplace.
Yeah, love it. So let me ask you this then, Josh. When you look at, you just mentioned it there, so you need the data to be able to make these predictions, or to make these insights, or to use it to leverage it for your business. What would you say to companies or to businesses or industries, if you aren't as specific as you want to get, to maybe they're running on legacy systems? They haven't taken that first step, because there's some big companies out there that are still a bit apprehensive, and they're not really, or I mean, they're playing catch up at the moment. There's a lot of companies investing a shit ton of money into this area because they realize if they don't do it, they're going to be behind, and that's why they're very, whether it's the press releases, or it's the announcements, or whether it's the hiring sprees, or whether it's the grassroots education piece that they need to encourage more data scientists, or whatever it might be. How would you look at it for firms to replace legacy systems with AI and ML, or what those kind of, because we mentioned it earlier, right? Like those steps to bringing in AI and ML. What do you think?
Yeah, I mean, I could go on this one for a while, so please stop me if I start ranting, but I'm going to give you some anecdotes, and then I'm going to give you, cultural and sociological and all sorts of thoughts around this one. First off, we'll go back to my first business I started, Solovis. We started that business February of 2013. And so we were coming out of the financial crisis. The markets had turned to the positive. People had started to be employed again. The unemployment rate was coming down. And we had made a decision with my co-founder at the time. We made a decision that we were going to be 100% cloud-based.
Yep.
And the reason why we did that was because Microsoft's Azure was offering basically hundreds of thousands of dollars in free credits to young startups who were willing to use their service. And so we were like, look, to build the application, the size, scope, and scale of what we're going to build, it would have cost us millions of dollars. And frankly, I was living in Birmingham, Alabama. I had no idea how to raise millions of dollars. I was a first-time entrepreneur. And so we made that decision. We built out, the initial kind of beta and alpha of our application.
Yeah, and quickly, that's a great point, Josh, because that would be around the same time Satya Nadella made that massive shift for cloud for Microsoft, which obviously I always voice, not to cut in, but I always voice that's like what took Microsoft to the next level, because they made that investment.
Well, with Office 365 and I mean, 100%. And you're actually hitting on my point, right? The first, I dealt with big institutions. So legacy players, big institutions, some of these endowments have been around for 500 years, right?
Yeah.
So the first 20 meetings I had, I got laughed out of the room. I got laughed out of the room because you're cloud-based. Everything we do is on-prem. And that was the lowest of the low. I mean, we had built this solid application. Everybody loved it. And at the end of every meeting, it was, but we can deploy this on-prem, right? And we were like, well, no, this is a cloud-hosted application. And we were probably 3 months away from giving up. And I'm not joking. It was literally one meeting we had and then from that point on, nobody ever asked me about on-prem again. And it changed the adoption of cloud, the adoption of, and we'll get into AI and ML, but the adoption of cloud happened that fast at big institutions. And you see that now. You still got institutions transitioning, but JP Morgan, the biggest banks of the biggest banks, like they've made cloud adoption a reality, right? They've moved it, allows more adoption of cloud from younger companies, and you get this whole virtuous cycle that we've gotten. And we got real lucky, because the fact that we went from on-prem to cloud literally, overnight, suddenly everybody wanted cloud. And we were the only one who was cloud. And it was the next 3 to 4 years, everybody was playing catch up with this new player, because we had gotten on this tailwind of now everybody wants cloud. And we were 3 months away from giving up, because nobody would accept the fact we weren't cloud-based. So, or we weren't on-prem. So going back to this idea of, legacy platforms, the other thing that's happened, and this is the sociological aspect of what I'm going to talk about, is just the way people are employed today.
Yeah.
I'm a big history guy. I love reading history. I wouldn't consider myself an expert on anything, but, look, in the 1950s, 60s, 70s, if you took a job, you could pretty much be guaranteed if you did a relevant job, you might have a pension. You just put your head down. You came in 9 to 5, every single day. You did what you needed to do. You'd be okay, right? And there wasn't really a risk you were going to get laid off necessarily. My dad, other people's dads, 30, 40, 50-year lifers of these businesses. That started to change 80s, 90s, certainly the 2000s. And what's happened, in the 2000s and now in the last 2 decades, really has been this idea that, you could call it this disloyalty to some extent. It's really about what the individual wants, especially in this country, and I'd say Western countries. But it's you've got people jumping ship. You've got the Great Resignation we've all talked about, which I could talk about that for years. But you really have this idea that people take a position to be energized, to be, excited, to be, and guess what? If you're a legacy platform or a legacy player, and you're looking to employ the next generation, 20, 30, even young 40-year-olds now, who technically are millennials. And if you don't incent them through new ideas and through new technologies and through things along those lines, you're going to be behind the 8 ball really, really fast. So I would venture to guess that in 5 to 10 years, if you don't actually devote your organization, legacy or not, to constant change and constant adoption. And so I think we're going to see this cycle just continue to accelerate, right? We're going to see this cycle continue to accelerate. It's AI, ML, it's crypto, it's blockchain, it's adoption, adoption, adoption. You've got the biggest of the big legacy players who all have venture arms now. These banks have venture arms, investing in the newest thing, buying these companies early on, taking board seats. You've got a fundamental change in the way people acknowledge that it's not just we can be legacy and on-prem. It's acknowledging that if we don't, we're going to get left in the dust because we have to employ this next generation of people. And this next generation of people are not going to be fine coding in the same language for the next 20 years. And so how do we create a culture and an incentive to do that across the organization? So bit of a rant there, a bit of a ramble, but I really believe that legacy players are very quickly having to realize that their technology stacks have to constantly be in a state of change. They've got to adopt methodologies around those. They've got to give opportunities to test the newest technologies, whether that be blockchain, ML, AI. They have to be willing to apply it. They have to be willing to take it seriously. And that creates a whole nother, look, a big bank is never going to move as fast as a young, nimble startup. But, JP Morgan came out and said they were spending 15 to 20 billion on technology last year. Those are huge numbers, and you're not just doing that with legacy on-prem. And you see that across the board. So I don't think in 10 years, we're going to be talking about firms that don't adopt new technologies. I think we're going to be talking about the pace at which they adopt new technologies. So that's the way I'd answer that question. It's having to fundamentally change. The idea that we're a .NET shop and that's all we do, and we're all relational databases, and everything that we do is going to be off relational databases, and these new technologies got to be validated for more than a decade. That's kind of gone by the wayside, and it's very quickly changing.
Yeah, I think there's something to that, because if I'm going into a company, I want to make sure that company is really investing. Well, when I was an employee at an engineering company, I only liked it because of the technology they were using, and it's very exciting, like seeing all these kind of cool robotics be put into massive manufacturing plants and everything. But I think if you don't have that kind of investment, and it's what I saw at AI Summit in London the other week, and it's all this big shift, if you don't really encompass it, you're not going to have a team. And that's where you're going to get the staff shortages that people say, like the Great Resignation, because it's like, well, you're boring, essentially. You're not investing, you're not taking chances, you're not taking risks, and people want to be part of those companies, I think. And I think that's what you're getting at as well. If you're not going to be one of those companies that really wants to try and be that kind of first mover, a lot of people get quite bored by it, I guess, the younger age groups. They're just thinking
they're going to get bored and they're going to leave. That's exactly what I'm saying. I mean, and you can even take that down to what Amazon's doing now or Starbucks is doing now, right? Like paying for college, paying for healthcare. And these are things 5 years ago were unthinkable for an hourly worker, certainly in the United States, for an hourly worker. And now, and part of this is just fundamentals of the employment situation, which is so hard to get employees.
Yeah.
But, I mean, you apply that to people who are highly educated and technical. And I'm just going to leave it at, highly educated and dedicated to being in the workforce. If you don't incent them through new and novel, the way the millennials and the next generation's minds work, you're going to be in trouble, and you're going to get left behind. So, I think that that's just a fundamental shift that's been happening over the last 50 years, but in the last 10, it's accelerated because of cloud, because of AI, ML, because we've moved from relational languages like Java and .NET to, more scripting languages, to some extent like Python and others, even though those aren't necessarily enterprise grade. You've got things like Ruby on Rails that allow people to get, platforms up. And while that's, to some extent died off, you've had just a tremendous wave of how to get people into technology, how to get them involved, how to apply, data science and things like that to data itself. And that's only accelerating.
Yeah. What do you think then, Josh? Do you think there's an area specifically they're getting it wrong with the education piece? Like companies are getting it wrong, or like I look at it from, is it people like I'd always hire someone that's been into work rather than been to university. I don't know why. I just think, well, they have more experience. But we have a big problem over here, or not big problem. It's a problem. I don't want to quantify the problem, but looking at it from saying how many people come out of maths degrees and then they can't become data scientists because they still don't have the skills. And I don't know, from your perspective, being a business owner in multiple businesses and seeing it within the finance world, and you've, as you were saying, working with some of the big globally recognized brands, how they're getting it wrong with maybe that education piece, if that makes sense, if that's a good question.
Yeah, I think it is. I mean, I tell the story all the time that I brought in several people in my last business that were making $35,000 because they were waiting tables. But they had a decent education. I'm not saying no education, but nothing necessarily to write home about. And today they're probably all making over 350, 400, right, in 5, 6, 7 years time. And I am a big believer, to answer the question directly, I'm a big believer in looking at aptitude, and there are ways to test aptitude, and there are ways to evaluate drive. And there are questions to ask. And look, this is much easier to do in smaller and medium-sized companies than it is when you're trying to hire 10,000 employees, right? So I will definitely acknowledge that. As well as, bigger companies just have, this is why small companies exist, in my view, just to kind of pivot a little bit. This is why small companies can't exist, because the big companies have to hire thousands of people, and they're hiring and firing and moving, operations around and all sorts of things. And look, just you can't do that quickly, and you can't be as aggressive. Plus you have laws, and how you compensate individuals has to be relatively equal, especially at the big company levels. And if that's the case, like you're boxed in, and that's not inappropriate. It just means a company like mine can go and find someone, and I can be able to evaluate that this one person can do the work of 5 people. So if I double their compensation, well, I've got a leg up, that I've got the smartest guy in the room. My co-founder of my last business, and saying nothing about this business, we've just done it differently. My co-founder of my last business one person, he was a developer. He was my chief technology officer. He could do the work of 20 people. No problem. By himself every time. Now, that had its problems towards the end, where, ownership and how he scaled himself. Like once we started needing 40, 50, 60 people. Okay, you being 20 is helpful, but if you're not sharing the load, it becomes unhelpful at some point. But that initial phase, like being able to have him, we did in 2 years what some companies have been trying to do for 25 years, right? So I look for aptitude. I look for drive. I'm fortunate to be in businesses that have sub 100, 200 people. That makes it a hell of a lot easier. even when you get to 50, 60, 70, you do need people who just want to show up to work every single day. And so, I think it's really important for businesses to identify what technology can do, talking about AI and ML.
Yeah.
How can you be technology first in everything that you do?
Yeah.
And for a startup, a lot of times it's how long is it going to take us to get to technology first? And what do I need to do to supplement that build out of that technology, right? Where a lot of companies, I think, make mistakes.
Yeah.
Is if you look at startups and you look at young businesses, right? I don't think there's anything wrong with burning capital. Nothing wrong at all with burning capital. If you understand the levers that will ultimately get you to profitability. And what you see a lot of is, I'm going to build a completely unprofitable model that, yes, I can add revenue to all the time, but don't ever understand the levers that will allow you to flip to profitability. If you don't have that perspective in place, whether that's through AI, ML, other forms of technology, efficiencies, there's nothing wrong with burning capital if you know your operating levers are there, right? A lot of people just say, I'm going to grow at all cost. And that was the whole mantra over the last 5-10 years, the venture capital. Grow, baby, grow, and eventually we'll figure it out. There are going to be a lot of companies that have billions of dollars in revenue who might not be here in 5 years or have to get acquired by profitable businesses at lower than their IPO prices and things like that. Why? Because there aren't operating levers in that business alone that will allow them to ever see a dollar of cash flow. And so I think the world and the pendulum is shifting where, because of inflation, because of interest rates, because we can't just assume the value of the dollar today is going to be the value of dollar, 80 years from now, like for the last 25 years. I think you're going to see a slow in the amount of innovation a little bit. But that's because people aren't just willing to throw money at things, the way that they were for the last 15, 20 years, frankly. Minor blips in there. So I think you're going to have a little slowing. But like I said, I look for aptitude. I look for drive. It's a hell of a lot easier to do in 100 less, 200 less employees than it is to do at 10,000. But that's why I think startups can exist. And that's why I think we hold the advantage a lot of times, because we're the first movers in technologies, and we know we have to get to profitability at some point. And that gives us a real kind of kick in the tail.
Yeah. A lot more drive as well, a lot more kind of like passion to get it done, a lot more close knitness. And it's great because you mentioned it there, Josh, aptitude tests and everything, and making sure how they fit in, because I always find it funny how it used to be, going back to your viewpoint earlier, and I completely agree with it, that you'd have companies back in the 70s, you get a job, you get a mortgage, you get retirement, whatever. But now you've got people that are coming into companies with very, very different attitudes. And some people might be more aggressive, more direct. Other people might be more like quiet. And there's that classic saying, like, the quietest person in the room is the most deadliest person in the room, because they're the one that just listens and takes all the notes. And I was speaking to a company called Cloud Factor, and they use aptitude tests for understanding how they bring people into the business. And they think it's okay if you're quiet, as long as the leadership team knows that, and as long as we can measure it, and as long as you're still getting the results. And I think there's been that massive shift, and I think technology has really spurred people to take that point. It's a real cool point that you touched on, Josh.
Yeah, I mean, look, there's aptitude tests, there's personality tests, as I think to some extent you're referring to. There are multiple versions of those. We've done things like, it's called the PI test before, which is basically just one page, like pick traits and attributes, and you're kind of done. I personally, like, I'm not technical in the sense I don't code, but I'm a very process oriented. I grew up playing sports. Like, my dad was my coach. Like, I'm not militaristic, but as close to militaristic without being militaristic as you can probably get. And so I had to do a big introspection and say, all right, a lot of people are not like me. My wife is not like me. If I get direct with her and aggressive with her, like, I'm not going to get what I want, and frankly, understanding that, being in a relationship, understanding that has been a huge eye opener for me as I look to employ people, and recognizing, like, when people talk about diversity, I hate it when we turn it into color and gender and, all of these things. Like, to me, diversity is diversity of thought. And you identify diversity of thought through diversity of emotion, through diversity of intellectual intelligence, through emotional intelligence. And different diversities, in the sense of different ethnicities, different races, have different backgrounds that allow them to kind of bring those different attributes to the table. But diversity to me is not, do I have a man? Do I have a woman? Do I have a, this race or this ethnicity? Yes, that's what it kind of shows itself as. But ultimately for me, it's, is there a diversity of thought? Is there a diversity of emotional experience? Because that's what I think makes companies better. And that can be applied to technology. How you think about how people interact with your technology. I didn't like it, but I had a young lady in my business say, my co-founder's name is Josh too. So basically the Josh is, look, sometimes y'all are just too smart for your own good, not to float our own boat, but you guys understand stuff we don't understand. And you got to stop. And I didn't like that comment, but it's 100% true. And we can't build a product that only we understand. So we have to build a product that's going back to a point I made, that synthesizes the complexity down to simplicity. And that's what AI and ML can do incredibly well, is take complexity, apply logic, apply training, and synthesize things down to simplicity. And if we can do that effectively, and we're doing it effectively, I think you can do a lot. You can do a lot.
Yeah, we've had someone just comment there saying, "I'm just like your wife. That's why I left my previous jobs without serving notice period." So that's a very interesting comment across there. Thank you, Sonali. But yeah, I get it, man, and I think it's a great point, just because you look at arguably one of the best innovators in tech, at least consumer tech, Steve Jobs. He loved people that argued with him. Like if you argued back and he stood his ground, like he'd love you. Like he'd be like, "Great, because that's what I'm looking for. I'm looking."
He might also fire you the very next second, but yes, he
might be those situations.
He was definitely a confrontational dude. But anyway, continue your point.
Yeah, no, he's a good one. It's a great book to anyone watching. It's called Creativity Inc. And it's done by the co-founder of Pixar, and obviously Steve Jobs was involved in Pixar. And it basically just showed how one of these Pixar developers was like looking at animation and basically told Steve Jobs to fuck off, and was just like, "This is the best way to do it. This is how you're gonna do it." And Steve was just kind of like, like didn't know what to say, and was just like, "Fair enough, I leave you to it." And it's that kind of attitude. I kind of like it when people push back, similar to you, Josh, like you're saying, like. The example you gave of being too smart for your own good, I think it's quite humble. It's quite good to have that kind of answer, because you can kind of step back and think, okay, if I can't communicate something to the outer world, I'm never going to sell anything, because they're not going to understand what I'm trying to communicate. So I think those are always good. And I kind of want to segue into the next question, because I saw something on your website the other day around the future of money and what people are saying. And it kind of touches back to our point, having the right people in, having that right communication. With all these technologies, Josh, like AI and cloud and tech and ML, sorry, and deep learning, I guess, to a degree, and neural nets and all these technologies that are becoming available at our fingertips, NLP, I think is going to be huge in the banking sector. And we work with a couple of customers that are in that area and helping them with that research. Where do you stand, Josh? What's your viewpoint from, maybe, I don't know, look at it either from a broad perspective or narrow down, leave it up to you. Where do you see the future of money with all these kind of technologies, the kind of educational piece, bringing it all together?
Well, I think that when you talk about the future of money, you've got to recognize how the markets have changed, right? It's no longer buying and selling stocks necessarily. You have a lot of ETFs, certainly mutual funds. Look, if I want to be allocated to a particular sector times 3, I can pretty much do that at this point. You can pretty much trade a concept however you want to. And so, I really think that one of the fundamental things I have a problem with kind of in the wealth space is access. Beyond access, you've got just, frankly, personalization, right? Access, and you could argue that really just falls under the access, but access and personalization are the two areas. When I think about my expertise, when I think about my area, wealth, investments, banking, the idea that just because I have a decent amount of money, right, I have access to things and availability to things that my mother in a million years would never have access to, from the ability to compound capital, the ability to get loans, the ability to get loans at rates that I didn't even know existed. and frankly, you've already seen this in credit scores,
Yeah.
right? Just because I don't have an 800 credit score or may not even have a credit score doesn't mean I'm unbankable. Doesn't
Yeah.
mean, I might have had a tragic illness, right? I might have, had just a real unfortunate circumstance. I might be recovering from something, And for me, the future of money, the future of wealth, the future of investments, the future of banking is personalization. It's
Yeah.
the ability, and without AI, without ML, without deep learning, without natural language processing, kind of all aspects of AI, it's impossible. You
Yeah.
can't have people, you can't train people. You can train people to interpret the results and personalize. You cannot train a person to go through the amount of data and synthesize the data from I do have a FICO, I don't have a FICO, to this, to that, to this, to that, to this, to that, to this, to that. And that's what a lot of these payments platforms, a lot of these lending platforms, that's really what they've done. Affirm, I can go and buy a bike right now and really just input information in and pay it off over the next several months, right? Or even the next year, like I could do with a Peloton bike.
Yeah.
These types of things, this is the future of money, right? It is hyper personalization, micro lending, the ability to be able to personalize investments that go beyond just my access to the stock market, but access to private businesses, access to what Kickstarter did for artistic young businesses, where my product could be what I could, you could invest in, and I could give that back to you because it's interesting, and that kind of validated it in and of itself. To me, this is the future of wealth. And look, there is a real old guard that is very, very protective of opening this up. And frankly, regulation. I mean, some of our regulation goes against this democratization of wealth and of investments. And I think the federal government, I think governments globally have to look at this. I think, but banks have to certainly look at this. There's an old guard in place that doesn't want to see this happen. But we're seeing it happen. And I believe that the future of money, the future application of these technologies is hyper access, hyper personalization, hyper availability, so that the financial advisor or your attorneys or your accountants or just the individual themselves can make decisions that otherwise they would never have been able to make on their own. And that's why this is a passion for me. That's why this is a passion for our business, is because we're not just making something easier. We're giving people a reason to do or to not make a change. And that change should be in their best interest. That change should be clear so that they can sleep better at night, so that they can follow up and understand. And to me, if a business doesn't have an ethos like that, they're just trying to make money, you probably won't be very successful in the modern world. And in today's age, people are going to catch on to things pretty quickly. So that's how I think about the future of money and using these technologies is hyper personalization, hyper access, the ability to synthesize information and really tailor and configure what you need to you. And frankly, as an organization, a big bank, have the confidence that I can still get the same amount of money deployed in a very safe way. Without giving it all to a multi-gazillionaire, right? Because that's really, it's
democratization almost.
It's democratization of what has existed for centuries. I'm excited about that, and that is a passion of mine, and I want to see that happen. And that's what we're trying to do at Vrgl to some extent, in a very, very small microcosm. But nonetheless, we're trying to do it, and that's a passion of mine and a passion of a lot of people I know.
I love that. And what do you think, quickly, because I know conscious of your time as well, I'm really grateful for it, but what do you think about platforms popping up like Robinhood and everything? Like, obviously we saw the risks of that, and not just them, but any others you can think of. What do you kind of think of that for the future of money and people that might, for the, I don't know, the advisors and the people that want to invest that might not have the tens of thousands or the millions of pounds? How do you think, is there an angle you've got on how that's going to change things? Because I'd imagine they're using a shit ton of AI to like look through what they're doing to manage the investments and everything. What do you think, John?
Well, I think Robinhood is a great example of democratization, right? I think what Fidelity and Schwab and all the big banks had to do in order to, it was a total excuse my French here, holy shit moment for the broker dealer industry. And look, Robinhood may be one of those companies that's hyper successful. It may be one of those companies that frankly by itself is not ever going to be a business. They're talking about regulating, effectively some of its ability to be, generate revenue out. So that would be detrimental.
Yeah.
But make no mistake about it. What Robinhood did for access to research, access to stock trading, access to just a lot of things around the ability to be in market was huge. Crypto access. I mean, what Robinhood did to make things mainstream almost overnight.
Yeah.
And of course, combine that with the fact everybody got sent home for a year and a half, 2 years, with COVID. And everybody goes, well, now I'm just going to go, and in the US, gambling's not, it's getting more and more legalized, but historically, hasn't been legalized. Robinhood, massive positive in the democratization of an otherwise very stodgy industry that you had to have a certain amount of wealth in order to not pay $5, $10, $20 to make a trade. They did that almost overnight, and all of the big banks, custodians, and broker dealers had to react to that. And that was tremendous, and yeah, I mean, I'm sure, Robinhood has AI and ML concepts that they've deployed towards, how to target, individual clients, how to think through things from a trading perspective, how to make recommendations to people about what they may need access to. They do that on their platform. I've been a Robinhood client before. I used to trade crypto that I had, although very, very small amount. I won't get into that today, but it really is, pretty tremendous what a platform like that does from a technology perspective. Relatively simple, right? Easy access to stock trading for free. Now let's make recommendations based on what your access or what you're investing in today, why you might want to invest in other things. The problem with it is just that there's no oversight, right? And it's not a problem legally, in my opinion, there's no oversight. But when you get the AMCs and the GameStops of the world, where it really becomes a casino, and that starts moving markets and affecting markets, you've got to pay attention to it, because it's, again, the average institutional investor probably isn't going to get hurt by that. But very similar to what I've seen happen to even friends of mine in the crypto space, behavioral psychology and behavioral, this is why AI and ML can be very positive as well, because it's nothing more than technology that's incredibly objective based on data and trends. I've had a lot of friends who've lost a lot of money because they put 80% of their savings in crypto, and I advised against it, but they've invested at 60,000. Guess what? I mean, you're in trouble now. So not to be sad about it, but these things are very positive. You've just got to be cognizant of the negative ramifications when things happen this fast.
Yeah, I think that's a great point to put it on, because look at what happened to Robinhood. It's a great learning curve. You can look at it and think, oh, it's disastrous. I think a problem is, if you look at it as a learning lesson, it's always pretty good. And I think the biggest mistakes haven't even happened yet. With the amount of innovation we've got going on, the biggest mistakes are still ahead of us. You look at what could potentially happen with all this, I think it's probably pretty minor compared to what me and you will be talking in 10 years, Josh, about another topic, and we'll have been like, fuck, look at all these things that have happened over the past 10 years, and what we're having today as mistakes or people being cautious about and minor. And I think technology will drive a lot of that. But last question. So something I just want to ask, and something for the audience to take away. And thank you, Sonali, for your point on fraud being hyperactive as well. I completely agree with that, with the surrounding what you were just talking on, Josh. What I want to say is, or what I want to ask is, for people that are looking at using Vrgl platform, or people that are clients or prospects and the advisor side, what are kind of some of the things you see? I don't know if this is the right way to word it, so maybe you need to help me here, Josh, but what are the kind of some of the pitfalls you've seen, or what are the kind of strategies you advise people to get started if they are looking at using Vrgl, or if they're kind of struggling with what data insights to look at? What do you think?
Yeah, I mean, I wouldn't necessarily make this a pitch on Vrgl, because Vrgl itself is a B2B, it's a B2B SaaS application. So we're selling to financial advisors. What I would say is what we give the financial advisors the ability to do, and the financial advisors that we really respect, and our clients are examples of these. They are advisors who truly believe that they have a job to do in being a fiduciary around your money.
Yeah.
Period. Whoever's money that is, but it's your money. The financial advisory industry, there's a famous firm in Boston, Massachusetts, GMO. They've been an asset manager for years. They're very statistically driven.
Yeah.
And I went to one of their annual conferences, and they made this comment that for the rest of my life will stick with me. And it's 90+% of wealth management.
Yeah.
Simply a wealth transfer, right? You look only, 80% of mutual funds don't beat their, stated benchmarks.
Yeah.
Right. So all you're doing is paying somebody 1, 2, 3, 5% of your wealth to get you market returns.
Yeah.
And if someone is not doing more for you than just putting you in market, and you're transferring that amount of wealth to them, right?
Yeah.
It might not be a lot for you. Justify it. Get it justified.
Right.
And that's what Vrgl does. Vrgl allows advisors to make very clear why they are justifying you trusting them with your money.
Yeah.
And granted, past results are not indicative of future results. I can't guarantee anything in wealth, and I can't take away from volatility. But my word of advice, based on Vrgl's ethos, is if you have people managing your money, if you're looking at the markets, justify everything. Justify everything you pay. Justify the fees that you're paying. Justify the tax ramifications on you. And look, I'm not saying you have to be an expert. Just ask simple questions, because not everybody in the space has your best interest in mind. Despite that being a commitment they make, that's not the case. And so our feedback simply is watch your back, and ask the right questions, and ask them if they're using Vrgl. And if they're not, ask them why they're not, because they should be describing you. They should be describing to you objectively why you should make a switch. And I think that's an important point.
I think that's a great point. I think that's I love your mission for it as well, making sure that both sides are protected almost is what I'm getting from it, and to make sure that it is a sound investment and that it's the correct investment. Because you said there are people out there, not many of them, but there are people out there that don't always have your best interest. So it's good to have that kind of security behind it. I think that's a great point to leave it on, Josh. And I really appreciate you joining. It's a topic that really blows my mind all the time. And we went down some different sections that weren't necessarily accounted for, but it was great to walk through it with you and learn from you, Josh. And really appreciate you taking the time to share all these insights with us.
My pleasure. Really appreciate it. Have a great one.
Nice one. And thank you to everyone that's joined us today. As always, let us know who you want us to bring on the show next. We always try and bring you the best minds to talk around topics that I get to learn from as well, such as this example episode with Josh. So appreciate you joining us, and have a great Thursday and brilliant weekend ahead. Cheers, everyone.